Okay, so this is going to be the like third to last or second to last day of the boot camp. I'm gonna probably finish the boot camp today just because I like uploading videos. So today we are gonna be going over what to do after one of your levels gets broken. So last video I left you guys off with how to mark out time frames and levels on the chart. Now in today's video I'm gonna be going over what to do after. So today's video is just gonna be all about fair value gaps. Good fair value gaps, bad fair value gaps. Hold on, I'll just write this down so I don't forget to do it. Okay, we got good FVG, bad FVG, strong versus weak. The faster it, better. FVG's getting canceled. Double FVG unicorn setup. Okay, that's it. Actually, I won't go over unicorn today. I'll make a separate video on that. Okay, this is everything we're gonna work on today. At least off the top of my head. Give me 3 seconds to think. That's it. Okay, nice. So, let's go over what to do after a level gets broken. So, if the sell side level gets broken, which sell side is the lower side. So, if the lower side level gets broken, if London low gets broken, you are going to be looking for a fair value gap to the upside. If you don't know what a fair value gap is, I'll explain it as simple as I possibly can. A fair value gap is made up of 3 candles, okay? I'm just going to write what a fair value gap is. It's, why in the world did that happen? Oh, text box gone, nice. It's a 3 candlestick pattern marking out where price is strong in one direction and where a lot of orders get placed. Okay. So, this is what a fair value gap is. A 3 candlestick pattern. Now, first thing, let's mark out what the pattern looks like. It is made up of 3 candlesticks. So, and the wicks and the candles do not overlap with each other. So if you guys don't know this already, this is the wick of a candle. It's where it didn't close, and this is where price ended up closing. So as you can see right here, we have a wick. As you can see right here, we have a wick, a wick, a wick, a wick, a wick, a wick. If there is a space between the wicks on the 2 candles, not the middle candle, but 1 candle, 2 candle, 3 candle. If the 1 and 3 candle wicks and borders do not overlap and leave a space on the 2 candle, just like this one right here, that's a fair value gap. So as you can see, this is a fair value gap. Now, what is not a fair value gap? This is not a fair value gap. You see how there's no space right here? This is not a fair value gap, no space. This, very small fair value gap. You see that? Very small right there, okay? This right here, fair value gap, okay? Now, let's play a game. Fair value gap or not a fair value gap? Right here. Is this a fair value gap? 1, 2, 3. No, because there's not a space there. Is this a fair value gap? 1, 2, 3. Yes, because there's a space there. Okay, so that's what a fair value gap is. Fair value gap, fair value gap, fair value gap, fair value gap. Okay, that is what a fair value gap is. I will also be leaving a video better describing by TJR what fair value gaps are that you guys can go watch. Okay, so price breaks a level. So normally whenever price breaks the London low, it will usually rally to the upside. If price breaks the London high, it will rally to the downside, most likely. So we're going to be looking for a fair value gap to the upside if price breaks the low, and a fair value gap to the downside if price breaks the high. So let's look for a fair value gap on the 3-minute and the 5-minute time frames simultaneously pointing upwards. So usually you can stay on the 3-minute, okay? Hold up, let me add this. Okay. So let's look. So as you can see right here, got a fair value gap. Hold up, I'm gonna go over this one more time. So, as you can see right here, put this on 3x. We get a fair value gap. Okay, right there. This is a fair value gap. It is made up of 3 candlesticks. It has a space in between the bottom and top wick. 2 candle, the 1, 2, 3 candle. The 2 candle has a space between the 1 and 3 candles wicks. Okay, so if we're gonna look for price, if we're gonna look to enter off this fair value gap, we need price to come down into the fair value gap and show that it doesn't want to go past it. So it would have to push up after. Okay. Hopefully, then we'll be able to enter a trade and we'll be able to catch this move right here. Okay, so how do we do this? How do we see if price rejects? We wait for price to come into the fair value gap. Boom, price is inside the fair value gap. Okay, as you can see right here, price pushed way past it, way past the fair value gap, but did it cancel out the fair value gap? In order for a fair value gap to get canceled out, price has to push through it without showing signs that it respects it. So right here, we see that this fair value gap got respected by this candle because it didn't close, the body didn't close above the fair value gap. So this is a respected fair value gap. But then right here, the body closed above it, and it pretty much said to this fair value gap, you're irrelevant, and the price would have continued to rally. Price would continue to rally up, or just not show respect to the fair value gap. Okay. So right here, we see that price disrespected the fair value gap. You'd think it'd cancel out, but because the candle closed above the bottom of the fair value gap, the candle closed inside of the fair value gap, it actually respected it, because this wick doesn't mean much. Everything that matters is where the candle closes. So right here would be a great time. Hold up. Okay. Nice. Right here would be a great time to enter a trade. Okay. Now, if you're saying to me, Evan, that is a bearish candle though. So how does it show rejection? Because, white is up, black is down. So if you're able to, what you can do is you can take a GAN box and you can mark out the 0.5 on it, or Fibonacci. If you can find the halfway point, you can copy these if you want to. If you can find the halfway point of the candle somehow, and you see that price closed above it, it's actually bullish. If you see price close below it, it's actually bearish. So, yeah, it doesn't happen often where this is the case, but in this case, it happened, okay? Because think about it like this. You have upwards, you have up and down, okay? This is up. That is horrible drawing, and this is down. If price closes above the 50% mark and goes up, that is showing it wants to go up. If it's closing below and it says down, that's showing it actually wants to go down. So you can mark out from the top of the wick to the bottom of the wick and see where it closes. If it closes above, it's actually a bullish candle. So you enter off that. You place your stop loss below it. Calculate 1% of your account here. And set this to 1 to 3. Okay. But right now we're just going to focus on the fair value gaps. So, yes, that's what a fair value gap is. Now, so you know how a fair value gap gets disrespected. The candle closes below it. Now, let's look at hold up, good fair value gap, bad fair value gap. Typically, the size of the fair value gap matters a little bit. If you find a super small fair value gap, you find a really small fair value gap for you guys. So as you can see, hold up, I got this. As you can see right here, small fair value gap, okay? If price retraces into this and rejects, it wouldn't mean too much. But if a bigger fair value gap like this gets created, it would mean more, okay? So the size of the fair value gap matters a little bit. Let me see if I can pause my recording. Man, I don't know if I can. Does this pause it? I'm not sure. Anyways, okay. So the size of the fair value gap matters a little bit, okay? Now, if there's a fair value gap that goes, I'd say, an hour without being hit, at least on a lower time frame, it's not as valuable. So if there's like a fair value gap, I mean, don't really worry about that too much. Similar with order blocks. If there's a fair value gap at like a price zone that hasn't got hit in a month, say that this happens, okay? Fair value gap right here, okay? Price rallies, comes back like a week later, it literally will not react off this fair value gap. If the market makers wanted price to hit the fair value gap, they would have done it literally right here. Okay, so if a fair value gap's been there for a long time without being hit, its odds are not gonna price not gonna react off of it. Okay. Double fair value gap. Okay, we're not gonna go over that. We're gonna go over that another day. 5 minute fair value gap. Okay. Now, if you see a fair value gap on the 3 minute time frame, always check the 5 minute time frame, because if there's, see right here. Okay, you see that there's a 3 minute fair value gap. Okay, and you see price comes into it and gets rejected. Okay, just like that. You always have to check the 5 minute to see if it also rejected on the 5 minute. And if it did, you can enter. Because if there's a fair value gap on the 3 minute and the 5 minute time frame, never be on the 3 minute time frame, because the higher time frame matters more. Because a fair value gap that gets respected on the 3 minute and gets disrespected on the 5 minute is just not going to be a good fair value gap. So if there's a fair value gap like this, where you see a fair value gap clearly on the 5 minute, and you also see a fair value gap clearly on the 3 minute, always look at the higher time frame and enter off the higher time frame. Okay, that's it, boys. That's it for the fair value gaps. Hopefully you guys can all comprehend that. Watch the video in half speed and write notes on it. But yeah, so yeah, so that's everything you need to know about fair value gaps. Next video is gonna be how to place your stop loss and take profit. Okay, it's gonna be super quick. Then the strategy will be over. I might in between make a video on how to enter the trade. I mean, there's not much to it. You enter off a fair value gap. But yeah, okay. See ya.